It's time for Hot Picks. Our guest covers the consumer discretionary sector, and she says her three stock picks are hardly exposed at all to tariffs. We're joined by Jaime Katz, senior equity analyst at Morningstar. Jaime, thanks very much indeed for joining us. This is tough, though, isn't it, for any analyst these days, working out what will the tariff pain be like?
Yeah, I think the biggest uncertainty is, how does the wallet get hit, and then where do they pull back from, particularly on the discretionary side? If this was consumer packaged goods, people are still going to eat in their homes and they're still going to go out to eat, but this is all discretionary, so nobody needs anything that is being sold to continue to survive.
Your first idea, not a packaged goods name, but Carnival, the cruise giant. You think that has decent prospects. Tell us why.
Yeah, I think, well, first of all, it does have much less exposure to tariffs, given that you're not selling goods from abroad, right? And you have the ability to source from multiple different locations around the globe. But it seems like to date, the rhetoric that's coming out of the cruise companies is that pricing is still holding up. And while it may not be growing as rapidly as it had been in the past, we still have positive growth. So we are looking at record pricing. And I do think, if there is a secondary impact on consumers' willingness to spend from tariffs, this is a value proposition for travel. So for families who are looking to really figure out how to optimize their wallet for a family vacation, cruising provides that.
Do we have any figures? Are Americans traveling abroad this summer? Because I guess a low dollar makes that more costly.
It does, but remember, a lot of the plans to go abroad were made earlier this year, or even at the end of last year. So, maybe there's some near-term cancellation if that equilibrium changes. But for many people, it's something that they've committed to long before today.
Your next idea is Hasbro. Tell us what the attraction is there, Jaime.
Yeah, so Hasbro, while it does have some exposure to tariffs. I think you look at 40% of the revenue base this year, and that is really from games and digital. And those parts of the business, relative to other toy businesses, is a lot more insulated from that tariff impact. I think this business has done a lot of improving the portfolio over the last handful of years. Underperforming brands have been out-licensed. There is a massive cost savings initiative underway. And I think that really helps them improve their balance sheet quality, which is something that I think a lot of investors are looking at to ensure that they are allocating capital the right way, right? They don't want to necessarily undertake risk to a degree that is beyond their comfort zone. And so in an improving balance sheet environment, I think Hasbro sort of wins with that.
It is interesting. Secular, I guess, in terms of long-term trends, it's tough selling toys, isn't it, with the kids obsessed with their iPads?
It is, but there's also Dungeons and Dragons digital. There's games like Magic the Gathering, and I think that is really what balances this business a lot more than other analog toy businesses.
And then finally, Wayfair, the online vendor of furniture and home furnishings.
Yeah, I think this is really a contrarian pick given where the housing market is today. But I think the compelling thing about Wayfair is that it owns none of its inventory, right? So there's no direct tariff issues. It is a marketplace platform. And so I think when customers are looking to determine what they want to purchase online, if they don't like the price that is being passed through by vendors, there's going to be another vendor at that price point that they are looking for, selling what they're looking for. So, no switching costs between vendors on the platform. And I think when we're looking at how long it has been since many people have spent on changing things in their house, 2020, when the pandemic kicked in and people were spending more time at home, we're probably at a period where some replacement is going to really start occurring. So while we might not have the boost we would get from turnover, even with that uncertainty around consumer spending, we're looking for positive EBITDA margin expansion this year. And I think, that's something that's hard to find around a lot of consumer discretionary spaces.
We'd better jump. Jaime, thank you very much for coming on the show.
Thank you.
Jaime Katz, senior equity analyst at Morningstar.